Warren Buffett's 7 Rules of Investing. Do you have some savings and you're thinking about investing some, but you don't know where and how to invest? Just like any game, investing also has some rules. You can't just invest anywhere and expect to start earning. It requires skill, patience, and some future foreseeing. First, you need to learn about the market trends and then look for successful investors like Warren Buffett, chairman and CEO of Berkshire Hathaway. Now, you don't need a degree to invest, but these rules of Warren Buffett are no less than some golden rules. Approaching the age of 90, Warren Buffett still has the sharp mind of a young man and is looking for potential investments. Warren Buffett is an American investor with a current net worth of $113 billion, making him the world's 5th richest man. From selling chewing gums, Coca-Cola bottles, and weekly magazines door to door to becoming the 5th richest man in the world, Warren has acquired some rules to work in the market. To get an idea about his foresightedness, he said in an interview, "The market of Bitcoin and cryptocurrencies won't end well, and we can see that happening now." If you're interested in becoming rich by investing, learning and acting on Warren Buffett's rules is a must. Without any further delay, let's start the video. But before that, like, subscribe, and share the video. One can say Warren Buffett is like Elon Musk of the investment market. His eyes are always on the future, and he tells his followers to do the same. If BBC and HBO are making documentaries on someone, he must be doing something right. It wouldn't be wrong to say that these rules would be taught in universities at some point. So how about we give you the class right here and right now. Number 7. Buy within your criteria and invest in what you know. The first essential thing before doing anything is to learn about it. If you're thinking about investing in something, learn about its market, its profits, its share, owners, when it started, and how it's going. Information is your key to success. If there's something you're an expert in, try to go for that market, but it doesn't mean you should avoid taking risks. If there's a company you think has a great margin in the future, don't be afraid to buy the stocks. The vital thing is to know the boundaries and how far you can go with them. Like in the start, Warren Buffett was fond of gaming, which is why he bought a pinball machine and started his business. Having an interest gives you an edge to move forward. 6. Don't be emotional in business. Think with your mind. Business is not about emotions, it's about learning, analyzing, and deciding. It's all about money, and there's no emotions involved in money. It's always better to prevent yourself from investing due to a family member, friend, or colleague. Don't take hasty decisions, as they can cause you a loss. Also, don't buy something solely based on its popularity. Look for its use and potential as well. One example you can think of is NFTs and cryptocurrency. Thousands of people around the world bought them in very big numbers. As of 2022, the market has crashed badly, and the rise is far in the future. 5. Don't let the opportunity slide. Grab every chance you can. If you are serious about investing in business, you should be on the lookout for opportunities. Keeping aside emotion, if someone comes to you with a great opportunity, you should not hesitate to take it. Fear is like an enemy to you in this business. A little factor of risk is always involved in investment, as it happened with Warren. He wasn't very knowledgeable about technology, but seeing the rise in it, he bought stock in Apple at $108.99. In 2020, the stock turned into a 182% profit. Whether it's a small business or large, if you see some potential, go for it. 4. If a small business is doing well, buy the stocks for long-term investment. Continuing the 5th rule, keep a look around small businesses near you. Warren has a great belief in small investments, and he's applied many times to buy small stocks. If you like the product and what the company is offering, chances are you'll like the stocks as well. Small companies may take time to bring in the cash flow, but if the business is doing well, consider it your long-term investment and believe in that. The cash will eventually come around, and you'll get your fruit at the end. According to Warren Buffett, if you don't think about holding a stock for 10 years, don't think about holding it for 10 minutes. 3. Don't hold losing stocks, and don't be afraid to sell them. Although long-term investment is the key to wealth, sometimes holding the stock does more damage than good. It's up to you to be aware of the boundaries and conditions of the market. If holding a stock is causing you loss, or you believe it holds no future for the market, don't be afraid to sell it. Instead, invest it somewhere else with more range to grow. Warren always believes in moving on. Just like during the COVID-19 pandemic, Berkshire was facing a downfall and losing its stocks. Warren saw this and turned his Berkshire $4 billion positions into an airline company. This decision saved his company from a very big loss. It is essential to move on with the world, just like we do in all areas of life. 2. Don't hold more than you can handle. Don't be greedy should be your first rule before investment. Let's say you've learned all about an investment and now you're confident about buying. What is the next step? You should be selective for your investments. Don't buy everything that comes your way. Holding more stocks will not be beneficial for you. Investors need to keep track of their investment. The minute you lose focus and track of your invested money, you should consider yourself at a loss. Don't fill your can so much that it starts to leak. Learn about your information capacity and then make investments. Number 1. Invest, earn, and reinvest. And watch out for small expenses. The first rule is basic for every field. The minute you start to earn should be the minute you reinvest. Keeping money to yourself will do you no good. Investing in business only flourishes if you reinvest in other things. Keep track of all your earnings, put aside some money for reinvesting, and then use the rest for your own. Warren followed this rule, and it allowed him to have his empire. He and his friend bought a pinball machine, and with the money they earned, they bought 8 more. After selling the machine with a greater profit, Warren reinvested the profit in more stocks and started a small business. All this reinvestments made him the 5th richest man in the world. Why you should follow these rules. Now you may be asking, why do I need to follow these rules? People do investments, for one thing, to make money and to become rich. Becoming rich is not a smooth road. You have to go through many bumps. Warren Buffett was successful in crossing all these roads, and that is why he presented these rules to make the road easier for others. The other thing is you should not waste your hard-earned money. Investing in stock may seem easy, but it requires patience, technical thinking, and a little bit of luck. If you follow these rules, chances are you will not lose your money. Instead, you will benefit from them in every way. Don't listen to others. Now, this is not a Warren rule, but a piece of advice from his personal experience. When Warren started his own business, his father did not believe in him. His father told him he would not succeed and his company would fall. But Warren did not pay attention to any of his wordings and invested in the company anyway. Later, his father apologized to him for what he said. So don't listen to others and follow what you believe. All that was started with 1,000 Ways to Make $1,000, a book in a local library. Lead to a personality that is followed by many. So if you are thinking about investing, then these are like golden rules for you. Follow these, and who knows, you might become the next oracle of your city. That's all for our video for today. If you think this video is helpful in any way, give us a like, share, and subscribe. Don't forget to comment on what we can do more. See you in the next video.